Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 3rd of June. All right, we are just getting into a serious holding pattern now as we sort of come up to Thursday's ADP data, weekly jobless claims. It's the first round of sort of employment numbers for this is a weekly sort of release, but a bit of a lead into the non-farm payrolls. And we do also have this sort of second ISM manufacturing number, the non-manufacturing numbers there as well. So you got a bunch of numbers coming out here in the US, which could potentially really kick us into gear, right? So, and in a lead up to this, we've got some European PMI data. So Euro's got to be in the forefront of your mind as you come into trading in that European North American session today. Now, once these jobless numbers are out of the way, right, we're heading straight to the non-farm payrolls the next day. So this is where the market is really sort of sitting back and scratching its head at the moment. Like we had the push to the downside under 90, the figure in the dollar index, back up to sort of 90.25. But now we're back trading sideways. This is a bit of a flush out of the market. You can see this across the board, across a lot of pairs. And I've already updated a lot of the charts. You can see here, sterling just banging down through those levels. But there's highs and lows that we've seen this week, pretty much across the board. And this sets us up for pretty explosive non-farm payrolls, right? So to me, good US numbers back to a strong dollar, right? It pushes the Fed into a corner with regards policy. And that's exactly what we're looking for. When the central bank has only got one answer, that's when the markets start trending and the market will run with it very quickly. So just bear that in mind as you come into trading today. Euro's got to be, as I said, at the forefront, or euro crosses. The dollar will be in play with the ADP and the initial jobless claims. Treasuries, well, you know what? They're bouncing around a bit up and down like normal market conditions, but they're not impacting like they have in the past, where they actually control dollar direction. So right now, I wouldn't be getting too focused on the bond market. Equities, right? These things are hardly moving as well. They want to know what the non-farm payrolls are, right, to get a real clear direction. And this week, disjointed with the US holiday on Monday, you can't do much else except wait for the opportunity. Now, the good thing is we're getting back to nicer sort of normalized markets where the market or the dollar will react to the US numbers, because that pushes the Fed into a decision. And then from there, you know, the equity markets and treasuries will move in accordance with what the Fed says. So the dollar direction should come from the macros and the implications for the Fed. If they don't, then we'll be back looking at equity markets and bonds. But right now, I'm getting a bit excited because this is where the business end of the week starts really today as we go through Europe and North America. Sets us up for a pretty explosive Friday. It's going to be pretty exciting. All right, guys, have a good one. Cheerio.